Hello, I'm Andy Agathangelo. I'm very proud to be the founder of campaign group Transparency Task Force. We are a UK-based certified social enterprise. Our formal mission is to promote reform of the financial sector so it serves society better. Much of our work revolves around helping to ensure, whenever we can, that rules and regulations are correctly written and effectively implemented. And that is why the King's speech that was delivered yesterday is of such interest to us because there is going to be a bill called the Enhancing Financial Services Bill, through which various regulatory reforms are going to be taking place. I'm extremely grateful to Mark Bishop, who's been studying this and analysing this, and he's going to be sharing with us his thoughts about what the potential issues are as a consequence of the regulation that's been proposed. Can we first of all show our appreciation to Mark for preparing his notes and his slides, and he's about to deliver them. So thank you very much indeed, Mark. We are very grateful to you as always for the work that you do. Mark's now sharing his slides. Mark, over to you. I've kept my introduction as short a period of time as possible to give us as much time to concentrate on the nitty-gritty as we can. Over to you, Mark. Thank you very much. Thank you.
Thank you very much, indeed, Andy. And hopefully everyone's screen is filled by this first slide. Is that the case?
That is the case, sir. Thank you.
Okay, thank you. So many of you probably saw the King's speech yesterday, started around 11:30 a.m. And if you watched it, you would not know that the government is planning significant new legislation in the world of financial services, because there was no mention of a bill called the Enhancing Financial Services Bill. However, if you read the 124-page or thereabouts accompanying notes, you would find out that such a bill is indeed planned. And it has also been flagged up a month or so ago in a fairly arcane press release by the HM Treasury. So the presentation that I've got is based on those two documents and not on the public announcement made by the King. And you'll see the slide is titled Enhancing Financial Services Bill Plans to Further Neuter the Financial Ombudsman Service. We all know what the Financial Ombudsman Service is, so I don't need to talk about that. But the phrase further neuter is probably worth mentioning. One reason why I've used that phrase is that they've already neutered it once. And what they did was to create a rule whereby every claims management company, for each claim they put in on behalf of a client, has to pay an upfront fee. And effectively what this means is the FOS, as it's known, kind of for brevity, will no longer be receiving claims through claims management companies. You could say, well, that's a good thing because claims management companies take some money that might otherwise go to consumers. Yes, but actually the counter argument is that many consumers would not make a claim themselves. They would only make a claim through the claims management companies because they don't feel confident to do it themselves. Indeed, with the PPI claims, which is a huge case, approximately 70% of the claims came through this route. So you could argue that in future cases, probably 2/3 or so of the claims will be destroyed or not happen because there are no longer going to be claims management sector. So now I'm going to talk about the additional rumoured harms or claimed harms that are in the new bill. So this is the big picture. The bill will be going through Parliament this year, and it was mentioned in accompanying papers yesterday. The FOS is the main target, and I'll give you a quote from the previous briefing by HMT. The Financial Ombudsman Service will undergo the most significant package of reforms since its inception. And I agree with that, it's definitely true. And the payments, there are other changes as well. The Payment Systems Regulator will be fully absorbed into the FCA. That has the potential to be bad news in respect of authorised push payment frauds, where the PSR has shown some degree of independence in the way that it treats, for example, banks and the liability they may have to their customers. The second thing they are likely to do is to reduce the scope and effectiveness of the senior managers and certification regime. This was introduced after the global financial crisis, largely because of a quote from Andrew Tyree, who then chaired the Treasury Committee, who said, if the buck does not stop with an individual, it stops nowhere. So they wanted to be sure that in the future, individuals working in this industry in a senior capacity would be responsible or held liable for the things that were done on their watch. And there were responsibility maps created that showed who did what within each organization. And those people were therefore unable to get away with things. If something happened, it's their fault. Next slide, here we are. So I'm going to walk you through the proposed changes, and here I'm relying on the press release from the FOS a month ago. What I'm going to do in each case is to tell you what they've said, and I'm going to give you what I believe is a reasonable translation of what they mean. So they said that they will adapt the, quote, fair and reasonable test used by the FOS to determine cases, setting out that where firms have met their obligations on the relevant FCA rules, they must be found to have acted fairly and reasonably by the FOS. So you know that the FOS can find on a fair and reasonable basis. It's fair and reasonable that this consumer should be compensated because of what happened. That's how they work. And now there is an absolute defence for firms which says, no, we didn't break a specific FCA rule, therefore you can't find against us. So I believe what they're actually doing is abolishing the fair and reasonable test, which is used by the FOS, requiring the FOS to find for the firms, even where they've broken the law, broken a contract, breached the consumer duty, or any other of the FCA's principles for business, provided no FCA rule was explicitly broken. And when you think about it, it's crazy. Somebody could go to the FOS and say, look, this firm broke the law. Here are people who've been convicted in this case. Can I please have compensation? Terribly sorry. No FCA rule was broken. No compensation for you, mate. So that's pretty bad. So this is the next one, what they said. They will introduce a referral mechanism between the FOS and the FCA to require the FOS to seek a view from the FCA where the FOS considers there may be ambiguity in what FCA rules require, or where it considers an issue raised may have wider implications across the financial services industry. Okay, so this is what I think they mean. Ensure that the FOS does not act impartially or independently of the FCA. So there is no longer risk that the FOS can provide a route to justice and redress for consumers when the FCA, mindful of its industry growth and competitiveness mandate, refuses to act. So basically what's happening there is the FOS can't come up to review independently of the FCA, and the FCA will consider not only its rules, but also, quote, wider implications across the industry when deciding how the FOS should judge an issue. Next thing they want to do is to introduce an absolute time limit of 10 years for bringing complaints to the FOS, while giving the FCA the ability to make exceptions to this time limit. Here's what I think they mean. Protect the industry from the really expensive misconduct cases that take a decade or more to come to light, either because the nature of the products is such that wrongdoing emerges only after many years, for example, pensions, mortgages, many types of insurance, or because the FCA successfully suppresses them until they are timed out. You can see here, claims like PPI, endowment mis-selling, what's going on now with car finance. These are things where the wrongdoing happened for more than a decade, long time afterwards, they emerged, and at that point, the liabilities of the industry are massive. The industry doesn't want to have to pay up. It won't have to in future. This next quote is an interesting one. They must make structural changes to the FOS to provide greater consistency in decision-making by giving the Chief Ombudsman overall responsibility for FOS determinations. What I think they mean is engineer out any small risk that an independently minded employee might find for a consumer against the FCA's wishes, setting a precedent that raises expectations among others and triggers a wave of claims that's hard to resist. So if you think of the FOS as a kind of pyramid, individuals at the bottom here at the moment can think independently. In the future, no, it's all got to go via the Chief Ombudsman, him or herself. That is the link person to the FCA. So now it's got to be that person who has the link with the FCA who decides whether or not a claim will be going through. And you can see what's going to happen. That's the person the FCA can bend the ear of, and the person will get sacked if things go against the industry. Next one, then to make it easier for firms and consumers to understand and learn from FOS decisions, by introducing a requirement for FOS and FCA to publish regular thematic reports which provide useful information and clarification on how the FOS will consider certain types of complaint, including types of complaint covered by FCA rules. Now, you might say that sounds reasonable, and it does sound reasonable in a way, but perhaps this is what they actually mean. Provide firms with a painting by numbers guide to how to submit responses to complaints that the FOS can easily use to reject claims, while also deterring consumers from complaining in the first place. So basically what they're going to do is put a load of things on the website saying, here are examples of things you can't claim for because no rule by the FCA was broken. Deters people from complaining, also helps the firms respond to complaints. Another thing they've said, ensuring the FCA as part of its responsibility for setting the regulatory response to mass redress events has the tools it needs to respond to these events quickly and effectively in the small number of cases where such an intervention is appropriate. And I should say here that the phrase mass redress events has a specific meaning for the FCA, which is cases where there have been a very, very large number of claimants. So endowment mis-selling, PPI, car finance, those sorts of things. So in those cases, they want there to be effectively a way for the FCA to respond quickly, which again sounds reasonable, but perhaps this is what they mean. Ensuring the FCA, as part of its theoretical responsibility for setting the regulatory response to mass redress events, in other words, it doesn't really want to do it, has the tools it needs to reject calls for such redress quickly and effectively by ensuring it is not frustrated by the existence of complaints upheld by the FOS, thereby guaranteeing that the number of cases where such an intervention occurs is very small. So basically, we're trying to get the party line out there early. That's what they're really trying to say. Okay, it might be worth talking a little bit about why this has come to light, why they're doing what they're doing. And the answer is car finance. And I'll take it in phases. The first is before Jan 2021. The FCA did not explicitly ban discretionary credit arrangements. These are arrangements whereby a company that provides car finance pays commission to a car dealership, which is higher if the car dealership charges a high interest rate to the consumer and lower otherwise. You can see this is very obvious incentive for the dealership to charge as much as they think they can get away with. The industry assumed that the absence of a specific named ban meant that they were okay, they could do this. Actually, they weren't okay, because the FCA's principles for business talk about treating customers fairly, talk about clear and transparent communications with customers, etc., all of which was contradicted by this form of behaviour. And also, much worse in a way for the industry, it turns out that it was against common law, and therefore people could go to court. So between 2021 and 2024, claims put through to the Financial Ombudsman Service and also legal claims all flooded in. Loads of people wanted compo. The FCA found that it could not protect firms from the financial costs of conduct it had not explicitly outlawed. So if you think of it in the big picture here, basically what happened was consumers have found two ways around the FCA. The FCA could not protect the firms. The firms obviously want to change that. So in 2025, what we've got is the industry demanding that in future, the FCA is the sole arbiter of liabilities, wherever possible. So the first thing they do is they go to Supreme Court to challenge the Court of Appeal findings about common law, and then they create pressure on the government to defang the FOS. And that's where we are. I have to ask the rhetorical question, does the industry have a point? Is it reasonable for the industry to expect a single, clear and consistent arbiter of what it can and can't do? I mean, one argument that says no is that actually, if the FCA doesn't explicitly ban something, because that term doesn't exist or didn't exist before, for example, mini bonds, that would be a really good example, of actually made up the term after the London Capital Finance scandal, or discretionary commission arrangements. Again, they made that up when they found out that this is what the car finance firms were doing with the dealerships. You can't ban everything by naming it if it doesn't have a name yet. That's one reason why the answer is no. But there is another answer here, and it's this GATSO camera sign, right? You've seen that sign. There might not be a camera, Or there might be a camera, but it might be a dummy one. You don't know whether it's real or not, but you slow down just in case. Actually, people and firms behave best when there is uncertainty about what they can get away with. Because you don't know what's going to come, you might as well behave properly. Right? So that is what they are taking away. I'm also going to talk about another reason why I think this matters very much, and I'm going to call it the hierarchy of standards. This applies in financial services, but I think it could apply in other industries as well. At the very, very bottom of this pyramid, you have the lowest standards ever. And that is what I call caveat emptor, Latin for let the buyer beware. So it basically means if you're going to buy a product of any sort, you've got to investigate that product and the people providing it in a lot of detail and form your own view as to whether that thing is any good or not. And if things go wrong, then it's up to you to try and sort things out. You can't go to a regulator, an ombudsman, or a court. You've got to sort it. So basically, are your heavies more scary than the other party's heavies? If so, you're going to win. If not, you're going to lose. That's not a great place to be, but that's where you could be. The next level above that is what I call captured regulation, self-policing. An example of this would be what happens in the world of solicitors. The SRA, Solicitors Regulation Authority, basically run by the solicitors. If you look at what proportion of complaints are upheld, it's like a tiny, tiny proportion, basically almost none. You waste your time complaining to those people. So captured regulation is the next tier up. It looks like you're not in the jungle, but you are really. The next level above that, enhanced self-policing, is genuine regulation. So genuine regulation is of some value. Some people who are probably independent form a view as to what is a reasonable set of rules and then go about policing and enforcing them. The reason why it's not perfect is that those people can easily be influenced. They can be bought. There are jobs that they can go to after they've been in office that pay much better that the industry offers them. And they're only human. They're not infallible. You can go a step above that and you can have an ombudsman or you can have some form of statutory dispute resolution scheme. Now, that is better because those people, their job is only to be independent assessors of people's cases. They don't set the rules. They only decide whether they've been obeyed or not. They also can refer to the law. They can also talk about, what's known as natural justice, the fair and reasonable test. So these people are better and they tend to be more altruistic in their nature. And that's, of course, the Financial Ombudsman Service. There's a tier above that. Once you get above here, you're talking about civil litigation. You're talking about rights that are enforced by going to court. Now, there is a type of kind of law that happens in many industries called a duty of care. And a duty of care is where one party is obliged to avoid causing reasonably foreseeable harm to another party. And if that duty is breached and that second party loses money or is harmed in some way, they can claim compensation from the party that did the harm. This is a wonderful thing, and it means that you can get in front of, for example, a judge. Judge has been appointed for impartiality, and if you don't like that judge, you can go to a higher court or a higher court or a higher court. So you have all sorts of ways of getting justice that are totally away from the industry and the sector, and that's a good thing. I've also put in that same box something called the consumer duty. I've put false flag on the left. Consumer duty is a thing created by the Financial Conduct Authority when Parliament ordered it to create a duty of care. It said, here is this thing, the consumer duty. It is a duty of care. It isn't a duty of care. Firstly, because it's very specific in what obligations there are on the industry. It doesn't say just avoid reasonably foreseeable harm. So there are lots of exemptions. And secondly, if it's breached, you cannot sue. So it's not brilliant. It is a pretend duty of care. But above the real duty of care, there is something else, a thing called fiduciary duty. I've called that enhanced civil litigation because your rights as a litigant, or your rights as a customer, probably more accurately, are much greater because a fiduciary duty is where an organisation or an entity is required to provide the best service, the best products, to put the interests of its customer above itself. Now, that exists in some legal jurisdictions for financial services, does not exist in the UK for financial services, except that The Court of Appeal, I'm no lawyer, but my interpretation is the Court of Appeal found that it might exist in respect of the selling of loans, car finance loans, to people buying these cars. This was largely or partly overturned by the Supreme Court. So this is a fiduciary duty, that's the top of the tree. Now, here's an interesting thing. If you go to, let's be honest, some low-income country in Africa or wherever, you have a caveat emptor regulatory regime. Yeah, you buy the product, you take your chances. Poor countries, low trust societies, small financial sectors, you have caveat emptor. The higher you go up this pyramid, the more these things are associated with wealthy countries, high trust societies, and large financial sectors. If you listen to the lobbyists for the financial services industry at the moment, one reason why they want to get rid of the financial ombudsman to have just the FCA via proxy deciding these things is because they want more growth in the industry. That's what they tell us. Somehow we'll grow, we'll become more competitive with other countries. Well, actually, the largest financial services sector in the world is in America. And in terms of the consumer-facing stuff, they owe a fiduciary duty, the highest standard of care. So perhaps actually what they're doing is destroying the industry. But of course, if you're a big firm in the industry, you do want to destroy it. You've got a dominant position. You want to enforce or strengthen, build up that position. You don't want competitors coming in and taking away. You don't want higher standards. You want to be able to get away with the lowest standards you can. So that's where we find ourselves, unfortunately. Now, I put here a rhetorical question. Has the industry overreached itself? Now, when I was putting these slides together, it was over the weekend. And I was thinking to myself, well, actually, this stuff is not popular with consumers. This government is unpopular at the moment. Does it really want to push through stuff like this that is against the interests of consumers at a time when it's just lost, 1,500 local council seats? No rumours that there might be some attempt to try and get rid of Starmer the Bollard. So actually, since then, events have been moving very rapidly. At the moment, we have at least 3 viable candidates wanting to challenge him, possibly a 4th coming down the line. So at the moment, is this a fight that the government really wants to be having? I don't know. I think it's possible not. Also, isn't it interesting that this bill, and this is a specific bill, it's not an amendment, was not mentioned in the King's Speech? Is it possible that some of the people who might find themselves implementing the King's Speech are not in favour of this legislation? I don't know. It seems to me if I was, Miles Sellich from the City UK, I would be wondering right now whether I'm going to get this away or not. Can we exploit the industry's hubris? In other words, has the industry, in wanting this legislation, actually created an opportunity for us to do something that we want to do, and that would be in the interest of consumers rather than the incumbent firms in the industry? The reason why I say it is every time legislation is created, you're also creating the opportunity for both houses of Parliament to amend it or put forward amendments which may be debated and voted upon. They may go through. And although it may be that the government might resist those, sometimes they agree to them because during the process of a bill going between the Commons and the Lords can keep saying, we don't like this, we're going to hold it up. And this is called ping pong, they send it back. And this ping pong process can cause a bill to run late. And when that's running late, they have a problem with other bills that they need to debate. So sometimes they agree to stuff that they don't like. So it's possible we could get some good stuff in instead. Again, if you look at the big picture, what's the industry's plan? The industry's plan is to use legislation, shown here in yellow, to move us downwards from the consumer duty, which is a fake duty of care, and fair and reasonable, which is the ombudsman, down towards captured regulation being the only thing that protects consumers. We can go the other way. We can take it from fair and reasonable into a genuine duty of care, or perhaps even a fiduciary duty, if we can persuade the right politicians. So how might we do that? The core solution, I think, is to make a rule requiring firms to honour the FCA's principles for business. So you leave the FCA's 12 principles for business, one of which is the consumer duty, exactly as they are. Don't change a word of it. You just create one single paragraph, one single sentence even in the FCA's rules, and there are 30,000 pages of them. So one tiny little thing says, thou shalt obey the principles for business. Now, the minute they breach a principle for business, they've broken a rule. And that means that the financial ombudsman can get them. And better yet, the rules, breach of those, you can go to court. So you can also go to court. Fantastic. So we would end up, consumers, having more rights than before, and the consumer duty, which, to be honest with you, was sold apart, that will actually have some value in this environment. You could also, if you're into belt and braces, also create a statutory duty of care, which means that the courts could rule on whether or not firms have prevented reasonably foreseeable customer harm. This is unfinished business because back in the 2021 Financial Services Act, there was an obligation placed on the FCA to consult on and bring forward rules giving effect to this duty of care. FCA, of course, didn't do it, did the consumer duty instead. Even better, you could create a statutory fiduciary duty, which sets a higher standard. Now, I'm realistic enough to know that those two things, the belt and braces, and even better, they're big fights. And I don't think tactically it would be right to have them at the moment. But the core solution, requiring the FCA to make a rule, that's such a tiny, tiny little thing. How could they possibly resist? And how would this work? How will we go about doing it? The first thing to do is to get a lawyer-drafted amendment, or amendments if you want to go for the other two, and identify MPs and peers to propose and second these and speak on them. Second thing would be to build a large and high-profile coalition of high-profile consumer and industry advocates. So I'm talking here about, Martin Lewis. I'm talking about Which. I'm talking about, the Citizens Advice Bureau. I'm talking about, the Bar Standards Council, the Law Society. I'm talking about all of these organisations. Got to have them thinking this is a good thing. And then with them, so working with them, not doing it on our own, create momentum for these changes using high impact media campaigning. Okay, so not only are there, consumer advocates on side and a few politicians, but far more important, the massive politicians see this thing every time they watch the TV or they read the newspaper. They think there's real momentum, there's groundswell, it's what the public want, the public demands this thing to be done. And then you can recruit as many MPs and peers as possible to this campaign. And then you think you've won. You think it's going to be not just proposed as an amendment, it's going to be debated and voted on, and the vote will be won. You even think that it'll be won several times, but you win it in both, you've got to win it in both houses and probably several times because of ping pong. So you think you're going to be there. But there is going to be rearguard action, I promise you. Never, ever underestimate the power of the financial services industry. The last minute, there'll be a proposal of a different amendment, and that different amendment will be worded in a different way. And that amendment, which will get more support, will be the one that looks like ours, but isn't, and doesn't actually have any effect. So watch out for that because it will come. I will say that this, if we choose to do it, would be an all or nothing campaign. What do I mean by that? If you skip one stage, the whole process fails. Let me talk you through why. What are the first words in this slide? Get lawyer-drafted amendments. Let's say we don't go to a lawyer. We draft the amendments ourselves. One small error there, and we've created in law something that doesn't work. This is actually what happened with the requirement of the FCA to consult on and bring forward rules giving effect to a duty of care. Because the well-intentioned peers, working as they were during COVID, with like remote operation and God knows what else going on, they drafted the amendment themselves. And the amendment basically said the FCA should consult first. The problem is the FCA said, here's the consumer duty, isn't it lovely? And everybody in the industry said, yes, it's fantastic, we really want it. And then they, of course, were giving effect to the thing that they consulted on. So you could say we were within the rules. But they weren't really, because they weren't actually consulting on duty of care. But it came down to, like he said, she said, which is why they got away with it. The next thing is build a large and high-profile coalition of high-profile consumer and industry advocates. If you don't do that, well, actually, the amendment will be proposed by your favourite politicians, but will not be called to debate. It will not be a vote about it. Therefore, it just disappears into ether. The next thing, create a momentum using higher impact media campaign. Again, the same thing. If you're not creating enough noise, you don't get enough MPs and peers signing up to it, and therefore it's just dropped, politely dropped. Interesting idea, but it's not going anywhere. Watch for the rearguard action, as I said earlier on. We've seen that happen so many times. At the last minute, an amendment that you think is going to make it better actually makes it into nothing. So we've got to make this. If we were going to do this, it's got to be like TTF's #1 priority for the next year, and other things would have to fall by the wayside. Stuff we would love to have done, we can't do. That's what it would cost. You might not want that. You might be right not to want that. Actually, it may be that we should let this happen. Who knows? So I'm going to start off, or end rather, with 4 big questions. Is the FOS worth saving? Well, actually, it was pretty imperfect before, Maybe it isn't worth saving. Is there a better approach? I've just offered you an idea. You might think there are better ways. Are we up for the fight? And finally, do we have the means and the intent to win such a fight? There we are. That's my presentation over. See what you think. Be interested to know what you think.
Fantastic, Mark. Absolutely fantastic. Before we do anything else, can we once again show our appreciation to Mark Bishop for preparing those thoughts? It's taken years and years of knowledge and experience and insight to be able to formulate such a clear way of articulating what Mark has just shared with us. That's really, really extremely helpful, Mark. Mark, I've got a couple of questions for you, then we'll open it up to others to chip in. Bear in mind, we do need to finish at 5 to 7, folks. So if I can invite everybody, including myself, to be unusually succinct. Mark, could you please just go back, if you don't mind, go back to the slide where you showed the kind of the core ask, the idea of making it a rule, because it seems to me you've really given us a clear way forward there, because I think what you're effectively saying is all they need to do is redefine those principles and make them rules. And if we do that, then it completely changes the paradigm in which everything works. It seems like one small significant change like that could be the game changer that we're after.
Yeah.
Forgive me, Mark, but I think if you go back to that slide,
Yeah, do you want me to show that slide? Yeah.
Yes, please. Yeah, because I think that slide tells us the way forward here.
So
The core solution. Talk us through that left-hand column, the core solution, once again, crystal clear, and explain to everybody why this might be the most pragmatic thing to do.
okay. So I'll tell you what I'm going to do.
Yeah.
Years ago, I was working for this woman who was like tactical genius. And she said, Mark, the reason why you get things through is because you are offensively reasonable. I love that phrase, offensively reasonable. Now, if you said to the industry and to the government, this bill you've got, frankly, it's a bag of shite. I'm going to wipe my ass with it. The entire thing is rubbish. Get rid of the entire thing. I'll guarantee you'll fail. You will fail. They've spent ages on it. They've invested a lot in it personally. There's a lot of lobbyists whose careers are based on it. It's going to happen in some form. It is going to happen. So the offensively reasonable approach is to say, we love your new bill. We can see what the reasons are for it. Let's have it. Let's have it. However, over here, there are some things that are going to go horribly wrong if we do it as drafted. And that is basically a load of consumers will be harmed by things like, firms that clearly misrepresent a product or service, firms that breach contracts, firms that break the law. You surely cannot be intending that those people will get away with it.
Yes.
Consumers are not compensated simply because no specific rule is broken. So why don't we create a rule that says the FCA's principles for business must be honoured at all times by firms? If all you do is that one small thing, it's a sentence, create that one sentence, and all of these harms that could be caused, which I'm sure you didn't intend, honest, those harms will go away. That's the thinking behind it.
Well, Mark, thank you so much. That's really helpful. One other quick point for myself before we open it up to others. And if time permits, I'll squeeze in a little bit about the Hillsborough Law towards the end of the session in about 5-10 minutes or so. As I recall, Mark, the idea of a duty of care, this legally enforceable idea that would enable people to take bad acting firms to court, if I remember rightly, that idea was discussed and debated in Parliament I think it was 14 times over the last, I don't know, 15, 20 years or so. And as you've already indicated, under the Financial Services and Markets Bill that became Act 2021, I think it was, particularly in the laws, there was great support for it, and that led to the idea that the FCA should introduce it. And as you've correctly said, the FCA effectively gamed it and turned the legally enforceable duty of care into a consumer duty, which basically says what happens is whatever the FCA deems to be the right thing to happen. And if they don't deem it to be the right thing, that it doesn't really matter. I'm rushing this through. Presumably, the Lords and MPs who supported that activity to try to bring about a duty of care, they could be the very kind of parliamentarians we should go to try to get them to understand the points you've been making and get their support for the kind of changes we should be speaking about. What do you say to that, Mark?
I'm going to say maybe, but also maybe not.
Go on.
And I'll tell you why. Um, it was those lords who drafted it the way that they did,
Right.
which of course allowed the FCA to do what it did. Now, some of those lords have, interests in the financial services sector, to put it mildly. I'm not suggesting that they deliberately sold us a pup, but it's possible. So I'm just being a little bit careful. This is why I say, job number one, if you want to do this, is get a lawyer on
Yeah.
our side and to draft it. And even once you've got a lawyer to draft it, get another lawyer unrelated to that one, without the knowledge of that one, to look at it and say, is this
Yeah.
going to work? Are there any
Yeah.
loopholes to it? How could they change it so it wouldn't work? Belt and braces. I'm being a little bit careful in the language I'm using here because, I can think of one individual. I'm thinking perhaps one red-haired woman, for example, who, sometimes comes across very much amongst the Lords as being on our side, but maybe isn't, because she also has very significant financial services
Yeah.
industry links. Was it that individual who perhaps drafted it in this way, or caused it to be drafted in this way? So I think we have to be really, really careful. But in
Understood.
principle, everybody who supported that amendment might logically support a well-drafted amendment of ours if those individuals have been and are acting in good faith.
Understood. That's crystal clear, Mark. Thank you. It occurs to me that what we'll do next week, we can't do it this week, is prepare some comms to put out to all the lawyer contacts we have to see if we can find somebody on a pro bono basis to do the bit of drafting that needs to be done here. Mark, thank you again so much. Please do raise your hand, folks, preferably digitally if you'd like to come in. I'll go to gallery view so I can see everybody. Would anybody like to come in and respond to what's been said or discussed so far? Any comments, questions, or ideas? If not, I'll quickly squeeze something in to do with the Hillsborough law. I think Paul Callen's trying to take himself off mute. Is Paul doing that? Yep. Yeah. I think Paul's using no, it's okay, Paul. No problem. Feel free, folks, to raise your hand. Nigel Cairns, thank you very much indeed. Thank you.
Yes, I just wanted to highlight a message put in the chat by John Hayworth, which I think is absolutely key to what Mark's just been saying. And the answer to what he says, is there any way of delving into the drafting of the bills? Well, actually, there is. There's a whole area of how legislative drafting should or shouldn't take place and all sorts of considerations. I only learnt this today when I was looking into around, the King's speech that came up, and I've sent you something about it, Andy.
Right.
It's very, very useful to look into that in the context of what Mark has suggested.
Thank you very much indeed, Nigel. That's very helpful as well. Thank you, Nigel. Anybody else want to chip in with a comment or question here? I think John Hayworth is coming in. Anne-Marie Borg. Anne-Marie, please fire away. Lovely to see you, Anne-Marie.
There, sorry. Yes, sorry for my lateness, but a brilliant presentation, and it's such an important. We've been sort of fighting in and out of this for a few years now, and I think maybe what Mark said, to focus on this in a serious way is absolutely indispensable if we want to get somewhere, if we want to get a result. Do we have any good lawyers who can actually handle this?
We know that's a great question, Anne-Marie. We know lots of lawyers. We know various people who've hacked it for us, with us, helped us in the past on a pro bono basis. I'll just put a note in the chat to the comment Andrew Willows made. Have you thought of asking the American lawyers? My response is I'm thinking we should reach out to all our legal contacts quickly. I think that's very, very important. Thank you, Anne-Marie. Mark Bishop just put his hand up, so we'll go back to Mark.
I would suggest, Andy, firstly, we should do nothing until we see the first draft of the bill.
Right.
Because I think that the drafting, how it's done, depends on what the bill says. There might be a really neat way of slotting it in that makes it harder even for them to reject than otherwise once we've seen the bill. Second thing is, I do think that any lawyers working on this should be people who are skilled and experienced in British law, and ideally have got some experience in drafting of legislation.
Thank you, Mark. Quick question. The process from here, the debate in the King's Speech today and tomorrow, I think is it Monday when the debate in the section to do with industry and business, which is the context in which this financial services stuff is happening?
I mean, it's possible, but the thing is, depending on how things go with the leadership challenge, everything may be thrown into
right.
Chaos because other ministers may resign. Starmer's got to decide whether he is fighting on or not. He has, under the rules of the Labour Party, has an absolute right to be a candidate. He doesn't need to get 81 signatures. But this has never happened before. The Labour Party has never tried to remove or succeeded in removing a serving Prime Minister. So on that basis, he might just think it's too humiliating. He walks away. If he walks away, what happens to the legislative programme? God knows. The other question is, how long a leadership campaign will they have? If it's a very short one, then there may well not be much of a legislative programme. If there's going to be a long one, then they're going to continue. So at the moment, everything is thrown up in the air. That's another reason why I wouldn't be talking to lawyers until you've got a draft of this legislation. This legislation may die anyway. But equally, it may be that there's a load of people, and I'm thinking about people like Starmer and Reeves, who will soon be out of work. And those people will be looking for what I call thank you jobs. And the city has the best paid thank you jobs. So they might be desperate to get this through in its worst possible form.
That's fascinating stuff. Do we know when we actually get to see the drafting, the nitty-gritty detail? Do we know when that happens?
No, because no parliamentary timetable has been put forward. I mean,
Okay.
What tends to happen with these bills is for each bill they create a little website and that has different sections to it, and they draft it. If it's already been drafted, and what can happen sometimes with this, it may have already been drafted by lawyers from the City UK or UK Finance. It may already have been drafted by those people. They hand it to the parliamentary ones who change a couple of words here or there and claim it was theirs. So it may be that that's what's going to happen, or it may be that genuinely no work has been started on drafting it, in which case we might not see it until the autumn. God knows.
Mark, thank you. We're going to quickly go to Nigel Cairns, then quickly to Graham Dickinson, then I'm going to quickly show a short clip from the debate about hidden credit liabilities for reasons that will become clear. Nigel Cairns, thank you.
Yeah. Just a suggestion, Andy. We could consider writing to the Bar Council. They do, from time to time, undertake projects on a pro bono basis, and they were very helpful to us, if you remember, on commenting on the duty of care.
Thank you.
So,
thank you. Nigel, can you do me a massive favour? Please send me an email about that and copy in Alexandra and Chelsea, because that sounds like a great attempt to get some input. That would be wonderful. Thank you, Nigel. Graham Dickinson, then Steve Middleton, then I'll show this short clip about the Hillsborough law bit. Graham, thank you.
Hi. Firstly, Mark, thank you very much. It was a brilliant presentation. I think your what they really mean slides are absolutely on point. As a general observation, I've become utterly sickened in recent years that all the output from government, big corporations, etc., is just reassuring doublespeak that means the exact opposite of what's going on. And if we've got any messages for politicians, is that the country is just fed up with this nonsense that we're fed. And it's time the politicians said what they mean and did what they said.
Graham, thank you very much. I think the sentiments you've just shared are felt by many, many people in our community. Graham, well said, sir. Mr. Steve Middleton, thank you.
Yeah, I generally think that the whole push to expose hidden credit lines that's been going on for quite a long time now, and the Ulster Bank and now Lloyds Bank fixed rate loan frauds will be a big driver behind this because the liability is so huge, and to get that 10-year limitation in place, if there's no official review, then even if these frauds are exposed, then only those who can afford lawyers are going to be able to fight the claims. And I genuinely believe that is probably one of the biggest drivers behind them trying to get this 10-year limitation in. But I put it into the chat, and I wasn't really aware of them before. But this organisation, the City UK, the main lobbyists behind this are UK Finance, which we'd expect, and the City UK. And I wasn't aware of that organisation. Just been having a look, and it's BlackRock and JP Morgan and Barclays, and all the people all caught up in the highest level of corruption in the city. And should that not be called out? Why are people who appear all over the Epstein files, and involved in fraud and corruption at the highest level, sitting on these bodies, lobbying the government? Why would the government listen to them? I mean, Morgan were laundering all of his trafficking money for years and sued by the BVI government for it. Jess Staley from Morgan went to Barclays, where he failed to disclose properly his close friendship with his best pal, Jeffrey Epstein. Why are these people so caught up in very high level, well-known fraud now, having any influence whatsoever on the government? That's what I'd be saying.
I think you made some really interesting thoughts there, Steve. Thank you. I'm going to share my screen because I want to show you a short clip from the debate to do with hidden credit liabilities and the role of the Financial Conduct Authority. What I'm going to do is I'm going to play this clip. It's Ian Byrne MP. We've got to know Ian Byrne a little bit in recent months, and he's very, very passionate about justice. One of the things he's been doing superbly is leading the campaign for the Hillsborough Law. In a nutshell, the Hillsborough Law, as you probably know, is all about the idea that public bodies should be made to tell the truth, in plain English. So this is Ian Byrne about to speak. I'll go to the very beginning of it, and then I'll play it. It's only going to be about 5-6 minutes or so. I'm only going to play the bit where he talks about the Hillsborough Law. He then goes on to speak about Andy Candy's case, which some of you are very familiar with already. But here we go.
I'd like to thank my honourable friend, for the member for Hayes and Arlington, for securing this debate, but also his fight for truth and justice over many years. Many believe this issue goes to the very heart of the Hillsborough Law, or Public Office Accountability Bill, for which I'm proud to be the parliamentary lead. My focus is to ensure that this law delivers a true legacy for the 97 who died at Hillsborough, and for all those who have suffered at the end of a state that failed them. It may also form part of the solution to the issues we are discussing today, because this is about power without accountability, institutions that close ranks, and ordinary people left to fight alone. The Hillsborough Law is about driving a cultural change in institutions that resist transparency, and that is precisely where the Financial Conduct Authority is falling short. Time and time again, the FCA has failed to give straight answers to state questions. This isn't regulation, it's evasion. We have seen this culture before in Hillsborough, the Post Office Horizon scandal, contaminated blood scandal, many others, and this scandal may well join that damning list of state failure and cover-up. A 2024 report by the All-Parliamentary Group on Investment Fraud and Fairer Financial Services should have raised alarm bells for the then government. A former FCA employee described the worst staff culture of their 40-year career. We have heard of whistleblowers being sidelined, dissent suppressed, and an official line enforced. This is not a regulator acting in the public interest. It's an organisation protecting itself. And when regulators fail, people pay the price. Water, energy, finance, the list goes on and on. So let me turn to hidden credit liabilities. The APPG report highlights serious concerns about the FCA's handling of the mis-selling of interest rate hedging products to small businesses, including the failure to address hidden credit line risks and a pattern of evasion when challenged. Take the case of Andrew Candy. In 2008, he sought a simple fixed-rate loan. Instead, he was sold a complex product without being told about hidden credit lines, margin calls or risks by the seller at HSBC.
I'm pausing it there, folks. What I will do though is I'm going to put a link in the chat to the that tweet by Ian Byrne that you've just been watching, because it would be great if you want to watch the whole thing. It's only about another 4 or 5 minutes or so, and of course, please do share it. Please amplify it. Help get the message out there. So the reason I've shown that clip is because there is not yet a certainty that the Hillsborough Law, this duty of candor legislation, definitely covers the Financial Conduct Authority, the Financial Ombudsman Service, the Financial Services Compensation Scheme, etc., etc. And what we find ourselves needing, once again, in keeping with what Mark was saying just now, is we need to work with lawyers on a pro bono basis, because we have no money, to find out whether the legislation as currently drafted does or does not bring the financial regulators into scope. And what's causing doubt in my mind is the possibility that they may not be in scope because they are actually private limited companies. And if there is the possibility of them evading scope, surely they would take it if they could. All we're effectively asking for is Parliament to make sure that the Hillsborough Law includes financial services entities that act in a public capacity, i.e. as a public body. The question is, does their status as private limited companies prevent them from being deemed to be accountable under the legislation? I'm going to show my screen once again to make this point as crystal clear as I can. This is the Companies House webpage for the Financial Conduct Authority. I will put a link in this to the chat, and so you can see this for yourself. And if you look at the FCA's webpage in Companies House, you will see with your own eyes here that the organisation is, oh, bear with me, sorry, Financial Conduct Authority. Good Lord, I've actually gone to the wrong one. Believe it or not, there are actually different financial conduct authorities in Companies House. North Colonnade. Bear with me. It's not that. It's not that. I found this before. There are organisations with remarkably similar names to the FCA that we know. Here we go. The Financial Conduct Authority. The Financial Conduct Authority. Can you see here these words? Private company limited by guarantee without share capital. The FCA is a private company. And does that then give them the basis upon which to argue they do not have a duty of candor in the event that the Hillsborough Law is introduced? What I'm also going to ask you to do, folks, if you want, is to take a look at the section in the Transparency Times that came out today. The reason being is that there's a section in it where we can actually look at the other organizations who are also private limited companies. So the Financial Conduct Authority is one of them. The Financial Services Compensation Scheme is another. The Financial Regulators Complaints Commissioner is another private company. The FOS is a private company. The PRA is a private company. And so too is the Payment Systems Regulator. So that's why there's a doubt about whether there is certainty. We need lawyers to help us evaluate that. We'll go to Mark, who's going to make the point he's about to make, plus any final comments he'd like to share, and then we'll bring the conversation to a close because we have another Zoom meeting on this channel at 7 o'clock. Mr. Mark Bishop, back to you for your point and your final comments. Thank you.
So, I mean, to the issue of whether or not those bodies are within scope, the answer is for people to go to page 44 of the bill, and I'm going to put a link to it in the chat, and read what it says there. And my reading is that they list in part 2 certain types of body, and in the first section of it, it's definitely not any of the bodies that we're interested in. And then they say a body comes, and then it says at the end of it, any other body that comes within subparagraph 2. In subparagraph 2, it says a body comes within this subparagraph if it is not an excluded body, and by the way, they haven't excluded it, and its functions are functions of a public nature or include functions of a public nature. Now, for what it's worth, I believe that all of those bodies, their functions are of a public nature. So I think they're within scope myself. However, I stress I'm not a lawyer. I don't even have like an O-level in law, didn't even start one, you know. So what I say is not worth listening to, you know, but I think whether or not it's within scope will come down to that question. So I think it's worth talking to lawyers and saying to them, go and read page 44 on the basis of this. Are they covered or are they not? I think we could do it in a way, in quite a discreet way, because if we start making too much noise about it, the industry is going to say, oh, hell, we're creating a big loophole here whereby these bodies are going to be scrutinised under the Hillsborough law. We don't want that. Let's exclude them, because the wording that's already there creates an opportunity to exclude, because in little paragraph 4, it does list excluded bodies: a court, either House of Parliament, the Scottish Parliament, the Welsh Parliament, the Northern Ireland Assembly, an implementation body within the meaning of a bit of the Northern Ireland Act 1988. So they can add any other excluded bodies, and they could add this lot if they wanted to, or they can add it by category. They could say, you know, anything funded by an industry, even if it performs a public function. So we have to be careful, fly as low below the radar as we can, I think. But if we could talk to some good lawyers and say, are you comfortable that these bodies perform functions of a public nature, either wholly or in part of what they do? And as long as we can get a definite yes, then we're okay. But as what I said in one of those slides, we've got to keep always alert, because there's a load of people going to want to amend this bill. Some of them are not our friends, and they might try and amend it so that although today it covers those bodies, in tomorrow it might not.
Mark, thank you very much. 2 quickies, Mark. Did you say page 44? That's the first question.
Yeah, 44.
Thank you very much indeed. And secondly, Mark, would you like to help close the meeting with your final kind of overview comments about where you feel we are and where we need to go? Thank you, Mark.
Yeah, I mean, I think what we've got is what could be the kind of, you know, the dying embers of an administration that, you know, nobody really wanted. You know, they got 34% of the vote, and only 60% of people voted. So they're at about, like, you know, something crazy, like 20% of the electorate, the lowest mandate there's ever been, and they are falling apart. And they are trying to push through this legislation, which is a bold land grab that, if it happens, will take away rights that consumers have had since FSMA 2000, literally the year 2000. So it's like 26 years of a right that we've taken for granted. And I don't know if they're going to succeed. They're as weak as they're ever going to be, and the leadership challenge is going to make them weaker. So I think we may have an opportunity, but it's only an opportunity if we go hell for leather. Every corner that we cut will mean that we don't get there. You know, if the wording is wrong, it's not going to happen. If we don't build a big enough coalition, it's not going to happen. We're not going to build a big enough coalition unless it's everywhere in the media. It's going to, bloody hell, look at these consumer rights that are being taken away from us. You know, we need Martin Lewis doing an entire episode about the financial ombudsman, why you should defend it, why you should write to your MP about it. Yeah, if you can get that to happen, we might succeed, but only might. If you can't get that to happen, we won't succeed. Now, you might say, we can't achieve it, so let's not try. It may be, you know, people always say, you know, it's the taking part that matters, not the winning. I think they're idiots, actually. It's the winning that matters, not the taking part. You know, if you know you can't win, don't fight the battle. Go and choose a different battle that you can win. So I do think there's a strategic decision to be made, and it's about our level of capacity and commitment, and about the political environment, whether or not it's weak enough that we can go for it.
Superb stuff. Absolutely superb stuff, Mark. So grateful to you for preparing these slides and these thoughts and sharing them with us tonight. Can we once again and finally show our appreciation to Mark Bishop? That was wonderful, Mark. It really, really was wonderful.
Andy, thank you everybody for coming along. And please tell as many people as possible. If you know politicians, tell them. If you know people who work at Which or the, you know, Citizen Advice or any of that, tell them, because getting roots into the top of those organisations, that is how we will possibly win.
Superb stuff, Mark. Thank you very much. I'm going to close the meeting there, and we'll get the recording out in the next couple of days or so. Thank you all very, very much indeed. I'm going to close the meeting, and as I said earlier, we've got another one about to start with TTF USA and Canada. Busy day. Thanks all. Cheers, Mark. Super stuff. Thank you. Thank you. Thank you. Thank you.